A very, very good evening, everyone. I'm your host for the session, Swati Shekharan from IMAI. I welcome you all once again for the panel discussion on building the right infrastructure to secure crypto assets. We would like to begin by thanking you all for being a part of HODL 2021. We would like to thank our title partners, ZepPay and CoinDCX, powered by partner CoinSwitch, brought to you by partner Bitbns, platinum partner Facebook, gold partner Geotis, and bronze partner Hubai Global. Without further ado, it is my pleasure to introduce you to Mr. Harsha Patwardhan, the Senior Vice President, Sudrania Fund Services, who would be moderating today's discussion. Joining us today, we have a distinguished set of leaders. Please welcome Mr. Amit Sharma, the founder, FinClusive, Mr. Paweł Aleksander, the CIO, co-founder, CoinFirm, Mr. Mahin Gupta, the founder, Liminal, and Mr. Gaurav Dahake, the CEO, Bitbns. I would request all the delegates to keep posting your questions on the chat box. The panel may pick up a few at the end and answer to your questions. Over to you, Mr. Patwardhan.
Thanks a lot, Swati, and a very good evening to everyone. Nice to be on stage here at the conference. This is a very near and dear topic to me in terms of as the blockchain industry is getting going, having the right infrastructure in place, having the right protocols, mechanisms, and giving the comfort to all the stakeholders is very critical in order for the industry really to grow rapidly from where it is right now. We're going to start off this panel with a bit of introductions. I'll start with myself. I'm a Senior Vice President at Sudrania Fund Services. We are one of the largest crypto fund administrators in the world. We have about 250 digital asset funds that we do accounting and administration services for. And we pretty much see everything across the universe, from high frequency traders to venture capital investors and investment managers. So with that in mind, let me go to Amit Sharma. So I'm going to have each of the panelists actually speak a few minutes about themselves, about their company, before we start into some question answers and have a great discussion on this topic. Amit, you want to take it from here?
Thank you, Harsha. Thanks for that introduction. I'm happy to. So as the title says, I'm the founder of FinClusive. You can tell from the name, our true north and core mission is financial inclusion. And we take a unique approach recognizing the power that blockchain technology and virtual assets provides insofar as enabling financial access to the financially marginalized, households, small businesses, individuals, even corporates, legal entities, nonprofits can benefit from this growing technology and engagement really at the last mile as digitization of financial services continues. We are a hybrid fintech and regtech company, and that means that we recognize a couple opportunities, but that are also challenges in the rapidly evolving, decentralizing, disruptive alternative financial services space. Within the context of financial services evolution, products and services are increasingly digitized, increasingly being brought to the marketplace in a digital application outside of more traditional financial services or bank financial services and products. Insofar as providing those services, one common theme is regulatory compliance. And that is not only the case within the context of crypto companies, fintech companies, and other non-bank and alternative financial services within a particular jurisdiction or country, but they're increasingly global today. And as we are enabled as companies, as individuals, as households, to be able to transact and engage in a peer-to-peer environment without intermediaries, it brings more regulatory compliance, anti-money laundering, know your customer, and other related issues about risk and governance into the frame. So what FinClusive provides is two basic things. One, we provide access to global fintech companies, virtual asset service providers, increasing alternative or decentralized financial services applications, and we engage them with relationships with U.S. banks and soon global banks so that they can create and manage accounts and hold stores of value in insured deposits in the U.S. and be able to transact, be able to send payments for a number of use cases, whether they be employee funds and salaries, to donations to nonprofits and humanitarian works, to small business lending, to household remittances and corporate payments, be able to transact and send value leveraging both the bank's traditional rails as well as blockchain and crypto rails, peer-to-peer and other network transactions. All of that is enabled with a comprehensive, what we call compliance as a service application. And that's when we engage and bring together an integration of a number of different providers to provide support for know your customer, know your business, ongoing monitoring, transaction tracking, and reporting. And we engage with a number of different partners globally to ensure that those products and services can be well managed within the anti-money laundering stack. So we partner with a number of best-of-breed services within the context of those engagements to provide best-of-breed and global coverage from an anti-money laundering and financial compliance perspective so that we can enable financial inclusion in a risk-adjusted and globalized way. So that's the core of FinClusive.
Thanks, Amit. That was a great introduction on you and the company. Paweł, do you want to take it from here?
Sure, my pleasure. So I'm Paweł Aleksander, Chief Information Officer at CoinFirm. Our company focuses on anti-money laundering for blockchain and crypto applications. So the core of the service is a SaaS platform where our clients like crypto exchanges, banks, financial institutions dealing with blockchain can check the risk of the blockchain transaction counterparties. We also deal with fraud investigations and assets tracking, and we take the security of the blockchain ecosystem from the point of view of anti-money laundering, of securing fraud investigations, and applying allowing our partners to apply and comply with the existing regulations. Yeah. So thank you for that.
Thanks, Paweł. Mahin?
Hey all, I'm Mahin Gupta. I'm coming from a computer science background. I've been involved in this industry from 2011-12. I co-founded ZapPay before, and now I have started Liminal with a mission to simplify self-custody, where we empower individuals and businesses to hold their digital assets where they control the keys in a secure, simplified manner. The idea is that holding digital assets in multi-sig platform is very complicated across different chains and different digital assets. What we try to do is we try to build a simplified user interface where user can collaborate and do the transaction in groups rather than doing it individually, which helps them to reduce a lot of single point of failure, reduce a lot of accessibility issues, and ultimately we will help them along with a very challenging problem of inheritance planning for their digital assets. So once you set up your infrastructure on Liminal, then we will help you to take care of your digital assets securely along with the inheritance planning for the same.
Great. Thanks a lot, Mahin, for that. And you know what? There is something that you touched upon on inheritance planning, and I know that that is a big issue in the crypto space. We'll come back to that point as we go through it. But really building this whole infrastructure to make sure this whole crypto infrastructure works, there are several aspects that you guys touched on. So what I want to do is I want to talk about, one at a time, some of these aspects. So Paweł, I'm going to ask you specifically, on AML, it's super important that AML is done correctly, because right now the biggest threat to our industry really comes from regulators and their lack of real understanding of how to monitor AML and KYC compliance in this space. They're worried that small amounts of money get transferred, which will be used for illegal purposes. So you want to talk about what you're doing and how you've kind of built that space to give comfort to stakeholders as well as the governments.
Yeah, that's correct. Thank you. So when I first read the white paper of Satoshi Nakamoto, it was back in 2012, I realized that actually blockchain can be the most transparent financial system ever if equipped with proper AML and compliance tools. And this is from where our company is heading. And there is indeed a problem that over 90% 90% of crime and fraud in the crypto space remains unsolved, pretty much because there's a lack of knowledge, lack of real-time asset tracking, and of course the international nature of this type of cases and money laundering. Yeah. On the other hand, we've got the bunch of regulators, in different jurisdictions, different regulators who are trying to actually cover the space with proper framework. And we see that actually the space is developing much faster than those regulations. So to give you the example, for example, at the moment, European or US regulations cover, for example, regular traditional crypto exchanges. They mark them as obliged institutions that are required to implement anti-money laundering systems in their infrastructure. But on the other hand, some newer developments like DeFi's, for example, they are not yet quite covered with the existing regulations. There are regulations that are approaching to this topic. I think that Europe is going to be the first one who will regulate this space. But this is just one of the examples, and the importance here is that actually there is a flow of knowledge between the, for example, providers like us, between the law enforcement, between the regulators, so that and the community, of course, so that the regulations stick to what they should. Yeah.
Fantastic. So building on that, Amit, I will ask you a follow-up on this. As your goal really is to bring this to the masses, how do you give them comfort that their private information used for AML purposes is going to be stored in a very secure way, and give them comfort that once Paweł helps the government agencies to get access to some of them, that there is not going to be a threat to the masses, in terms of what kind of what Big Brother is watching over?
Sure. Thanks for the question. I will say that one of the implications of the question is that there's an assumption that Big Brother governments are really the only players accessing information. Let me just remind folks that anyone with a Facebook account or social media account is also providing their personal data to a number of different private sector companies. So there's an assumption by many people in the private sector that Big Brother and the governments are going to collect all this data and then be able to sort of monitor. And I think that that's certainly the case in certain jurisdictions, but certainly not all. And I would certainly reinforce that in many ways, in exponentially, powerful ways, the private sector on the data management cyber side have actually exponential tools to cover the capture of personal information, financial information that is freely provided by individuals to those networks. So I just want to caution that particular piece, because I think from an anti-money laundering perspective, and having been a regulator myself, having worked at the U.S. Treasury Department, post September 2001, in growing what has become not only the United States but also global anti-money laundering requirements for the financial services sector, the intent has been risk, governance, and transparency. And with that intent, absolutely, has there been overreach? Without question. And secondly, with the respect to more decentralized applications, peer-to-peer, non-intermediary based financial services, global payments that occur between two individuals or via these networks that are not transmitted through financial intermediaries or regulated financial intermediaries, those concerns go up naturally. However, like Paweł said before, the underlying technology today that we have access to with respect to distributed ledger and the characteristics that they bring, the immutability of ledgers, the decentralized nature of those ledgers, actually bring a much more powerful privacy-enhancing set of tools that can protect underlying personal identifying information and financial services information, but still maintain auditability, traceability, and transparency. That's key. And from an anti-money laundering perspective, if I can take client-related data that I am obligated by law in many of these jurisdictions as a financial services provider to hold onto, even for years after that individual or that entity has ceased services with my operation. Those laws are there for for transparency and auditability perspective. As Paweł also noted, and we are seeing this in the law enforcement domain, the ability to track transactions leveraging blockchain tools, blockchain analytics, blockchain forensics is actually incredibly much more powerful than we have in the normal sort of cash-based fiat world. And we're seeing this time and time again. And so in the context of sort of providing technology that not only helps deliver digital financial services access, especially through the last mile, but also enables that technology with the foundational privacy protections that blockchain technologies can afford and provide, both respect to the underlying information, one's personal information and financial and account information, transaction information, but also the enablement for auditors, regulators, and financial services oversight, law enforcement, and the like to conduct investigations that not only protect the underlying privacy information, but can actually leverage the immutability of a ledger to transaction track and trace for illicit finance purposes. So I think that we are today in a better place to deliver on the core intents of financial crimes compliance, anti-money laundering, know your customer, transaction tracing, and analytics today than we have been in the past, and certainly have been, provided many more tools in our arsenal to not only provide privacy protections that are essential in a globalized financial services environment with the essential traceability and transparencies that financial services need to have to ensure that the sector is not enabling illicit activity to occur.
Got it. Fantastic. Building on this, Mahin, do you want to talk a little bit about the hardware wallet solution that you're thinking about, and how practical it would be for the masses to use versus a soft wallet versus a hardware wallet?
I think I think the question is not about how practical it is. For an example, if you will see the banking services, we didn't have wallets, digital wallets like before 5 years, I guess, 5-6 years. I'm talking about the traditional finance. So at that time, the normal banking was working on checkbooks and all sort of stuff. Now people are using online banking. People did not hear about OTP or that type of protection before, let's say, 3-4 years. Now everyone is using OTP also. So as the technology progresses, as the instruments that you are accessing is having evolution, at that time the access methodology and usage also needs to be evolved. And I'm pretty much sure that once the technology is usable enough, like you work on UX side of it, then it is much easier for people to use. For an example, I think the current hardware wallet solutions, it's not only about the UX, the usability is very poor. I agree with that. The affordability is also a very big question. The learning curve is very steep. Mm-hmm. But what you have to understand is like digital assets and this blockchain-based assets are very different in nature than the traditional assets. In traditional assets, when you have a ownership and access, these are two different concepts. You can have ownership of the same money, but someone else can have access to it. For an example, your accountant or even the bank. In case of digital assets, ownership and access are the same concept. Once you have access to it, basically you have leaked your private key or all the information that is required to own that particular asset to someone else. So once you go into digital assets realm, at that time you will have to understand that if you are not controlling the private keys, it means that you are not owning. So access and ownership is the same thing. If you are owning it under hardware wallet, so now the current hardware wallet solutions like popular hardware wallets from Trezor, Cold Card or Ledger, they are mature enough now. They are not like the 2015-16 hardware wallets. The user interface is also much better now. Before you need to if you wanted to set up Trezor, it was like really very difficult thing. Now you just need to follow a simple procedure of writing down your 24 keywords. The problem is that because people has not done this before, they think that it is very complicated, and they are worried that if they will make a mistake, then they will lose their assets. So the core focus should be here on hardware wallets, the education part, and the familiarity part, where people will understand that if you are using actually hardware wallet, then you are actually making yourself and your assets much more secure. I'm not talking about even the multi-sig problem right now. Just owning your private keys via hardware wallet makes you 100 times much more secure than the software wallet, or even storing your coins on exchange or other centralized wallets.
Great. So going to Paweł then, when transactions occur, and one of the things your company I know does is wallet tracking, and you're trying to trace that. What are you looking for? What are the kind of red flags that come up, and how do you deal with them?
Right. Yeah. So the typology of crime and fraud in the crypto space is actually pretty much the same as in the traditional market. So you've got all types of crimes, including terrorist financing, drug trade, weapon trade, child abuse. You've got fraud, including hacks, scams, etc. Yeah. So it's kind of similar, and I see the approaching to that as a three pillars. First is anti-money laundering. Second is fraud investigation, and the third one is data ecosystem. Anti-money laundering is something that allows virtual asset service providers to protect themselves and their customers from interacting with illicit funds. So to give you an example, the exchange can input all their deposit wallets under monitoring and get instant notifications when, for example, the funds coming from illegal drug trade will come to the specific wallet. Yeah, and this is very powerful. This is something that is actually not achievable in the traditional banking system, because banks are working in silos, and here in blockchain we can actually base on actual knowledge. So not only on the patterns. In traditional financial space, typically banking AML services includes recognizing patterns. So for example, if the client made a structured deposit, or if there is a behavioral pattern that actually indicates the peak of some transactions, but otherwise they do not base on knowledge. In crypto, we can trace the actual information, for example, funds that we know that are coming from particular darknet market, and assign this information, for example, to a specific deposit address of a specific exchange via asset tracking algorithms. Yeah. The second pillar I mentioned is about fraud investigations. There is a lot of fraud in crypto space. I would say that the volume of assets that are under claim at the moment is exceeding actually the value of the world art market. It's several dozen billions at the moment. And with technology, actually, we can solve that problem. So whenever someone gets hacked or scammed, this asset actually can be now traced in real time, and the receiving services like exchanges can get instant notification, instant asset protection notice saying, hey, you've got funds that are under claim coming to this specific wallet, and then this exchange is by law enforced to freeze these funds. If not, it may become liable for not freezing these funds, and this actually gives another legal strategy for the benefit of the victim. Yeah, and the third pillar is data ecosystem, because the providers like us, of course, they get the information about the crypto crime and fraud from internet, from deep web, from partners, clients, but there is a specific niche for that, which is law enforcement, because the crimes, like for example the child abuse, they cannot be effectively managed by private intelligence companies, because I cannot say, for example, to my data team, hey, go to the child abuse website and scrub the information from there. So there are some challenges on specific crimes where the cooperation with law enforcement is needed, and this information must be marked in the databases of providers to ensure that when, for example, the exchange is receiving proceed of child abuse crime, they can stop that.
Fantastic. So we're talking about how you're monitoring all this. Now let's go back to what are you monitoring? You're monitoring an entire payment system and an asset transfer system. So Amit, your company has the platform for encouraging payments, transfers, and how do you think businesses should be using effectively this mechanism instead of just the pure fiat markets to affect global payments, global trade, and anything that they need to do in terms of moving money around?
Yeah.
Great.
Go ahead, Amit.
Oh, sorry. Just very quickly. Yeah. I'll add a couple things to Paul's earlier statements, actually, that lend some benefit to this question. One is efficiency, right? The ability to transact between two counterparties in near real time versus multi-day settlement adds much more value in terms of two things. One, the tracking and traceability being in real time, and interdiction, the ability to act if an anomaly is found in the particular transaction based on a number of rules, historical rules, pre-programmed rules, or behavior rules that are learned over time, right? So that is very, very helpful. The second piece is one that translates compliance to one historically that has been very much a responsive, reactive engine in the back end to financial services, to one that's much more proactive. And if we understand client and client behavior, transaction, and the analytics around those transactions associated with those anticipated client behaviors, we can then effectively look at in a very real-time basis the transactions and the behavior patterns associated with counterparties in ways that when applying machine learning and other advanced analytics techniques actually translate to real business value. Let's remember, 100% of anti-money laundering, risk and governance controls come really down to one question, and that is, do you know your customer? Do you know them? And it's not just do you know your customer from the standpoint of, is that customer legitimate? Is that person or company valid, verified? But do I know that customer in terms of what their business needs are? And that is part and parcel of what financial services organizations are trying to provide. What do they need from a day-to-day basis? What does their income and expense volatility look like? What do their payments and transactions look like over time on a day-to-day, weekly, monthly basis? And how do I orchestrate an environment for those financial services to be part of the very fabric of that business operation or that household operation? So know your customer is really full of a lot of data associated with the engagement of that particular customer and the counterparties that they relate to. If you can provide analytics that are not just in terms of transaction tracking, tracing from an anti-money laundering and anti-fraud purpose, but also translate that to critical business intelligence, where the financial services provider can say, I can offer products and services that mitigate certain risks over time because I know my customer better. So that's the third aspect of this, is that we have to not only look at it from an efficiency perspective and a business intelligence perspective, but we have to look at regulatory compliance, anti-money laundering, risk governance, tracking and tracing as part and parcel to the financial services architecture. And that final piece of this is really where traditional fiat-based, intermediary-based systems are now starting to really collide with and need to find points of integration to more real-time, peer-to-peer, and blockchain-enabled value transfer. This architecture looks fundamentally different than the intermediary-based traditional payment rails. And now they're intersecting, because at the end of the day, until blockchain-enabled finance and token-based or cryptocurrencies become more ubiquitous over time, you still need on and off ramps. You still need to get from fiat to crypto to fiat. And those intersections are going to be very much important. And you also need a modernized compliance stack to adhere to the same. So that's the tremendous value that we see going forward.
Fabulous. Paul, I think you wanted to add something to this?
Yeah, so pretty much I fully agree with what Amit said. So also it's much easier to profile customers, to design the products to their needs. Only basing on the analytics, we can profile the customer behavior, which actually facilitates addressing the product, and also this helps to mitigate the risk with the security, with money laundering as well. Yeah.
Fabulous. Mahin, I have a question for you, but before that, I know, Gaurav, you've joined the panel. Do you want to give a very quick introduction on yourself and the company?
Yeah, hey, so I'm Gaurav. I run Bitbns. We offer one of the widest varieties of products for crypto users in India. So we have a spot trading exchange, margin trading. We have an SIP product where people can DC into Bitcoin, and also a few other decentralized products. And we're working on derivatives as well. So futures and options is something that's kind of on the cards, which would be kind of coming. So with Bitbns, we have over 3 million plus users, and right now kind of one of the most liquid spot exchanges in India. I've been around for over 3.5 years, and have been fairly focused on the security aspect of things to ensure that any of the users' funds kind of remain really kind of tightly like compliant with respect to all sort of aspects in terms of AML and other things, and also on the security side of things.
Great, thanks. I'll come back to you in a minute, Mahin, but a follow-up question to you on, you made a very interesting point, right? Access is equal to ownership. It doesn't matter, whose name is on which account and things like that. So do you want to talk a little bit about protecting that access, making sure, what could be some best practices for especially individuals and even companies for that matter? And then how would, for instance, an individual transfer that access to their surviving heirs, right? Sometimes you may not want to give access while you're alive because you might fear something just moves out of your wallet. How do you manage that? Do you want to talk a little bit about that and how you would address it?
Yeah, sure. So this is very interesting point so in traditional finance, access and ownership can be different. When you use digital assets, like with what we call single sig, is basically where you are controlling all the funds. At that time, what is happening is access and ownership is the same thing. So whoever has access to that particular fund has actually ownership of the fund. For an example, if you have funds in the exchange, it means that exchange has access to it. It means that exchange owns it, basically. The simple solution to it, and I believe that we will go to that territory within next few years, that every digital asset that you will store, which is kind of your holding, will go always into multi-sig wallets, where you have more than one person or more than one systems securing that particular access and ownership to the wallet. I will not go into more technical part of the multi-sig. I would rather touch upon the inheritance part, because in traditional finance, inheritance is pretty much sorted. You have nominee and you have beneficiary. You have custodians. So basically, when you have a bank account, bank has actually ownership of all the funds. They are custodial. They have access and ownership of those funds, and they can distribute the funds to your nominee and give access to nominee and distribute it to the beneficiary based on the law defined. So that part is sorted into the traditional finance. Now, when you are trying to design that particular interface into digital assets, it is really important to understand that you cannot, because for an example, wallets like us, where we don't control the funds. So what we have is basically information which allows someone to access the funds, and we cannot transfer the funds because we don't have access. So at that time, what we do is we try to work on a documentation process So basically, inheritance is divided into three parts. One is the technical part, which is actually easier, the operation part, and the legal part. So the most difficult part is the operation part, where we need to educate the customer or wallet owner that what exactly you need to do if you want to plan your inheritance. For an example, when we create a multi-sig wallet for one of our family office, we have 2 out of 3 configuration where 2 people are required to sign a transaction. What we do is basically we make them write their seeds or mnemonics on a paper. We put it into a temper evident bank, and we ask them to put it into a bank locker under their name. Now that's where kind of a traditional finance system kicks in, where whatever nominee they have assigned to a bank locker can access to those particular seats. Now, once we do that, then we have an operational process where we educate them that this is your legal draft of will or kind of a documentation which they need to circulate between their nominees. If they, in unfortunate moment when they are not available, then they need to kick off this inheritance planning process, where we jump in and we help them with the operational part, where they can get access to that funds rather than actual funds. So basically, the first part is that you set up a multi-sig wallet where more than one people is involved, so that even if something happens to you, there are few more people who can access the wallets. Now, for individual and family offices, this is inheritance planning. The same concept goes for businesses and something like exchanges into a disaster planning. So if something happens to a one person, let's say in most of the exchanges, CTO is basically have access to 90 or 95% of the funds. Now that is a very big red flag, and it's a very big single point of failure. So what we do is we help exchanges and other businesses to redesign that infrastructure in a way so that access to the assets is distributed across different people, and not one person has access to most of the assets. I hope that makes sense.
No, that totally makes sense. So now that you brought up exchange, maybe Gaurav, you want to talk about how are you protecting client assets? And given we're not talking about few assets, we're talking about lots of assets across lots of customers, and the constant threat that exchanges face from hackers. Spend some time on just talking about how are you at Bitbns, making sure everything is being protected.
Right. So this has been kind of a constantly evolving sort of a process for us. We kind of were pretty sure that like when we kind of decided we wanted to kind of start on crypto exchange, the first page that we kind of made was a bug bounty page before writing any single line of code, because we were kind of pretty sure that so like that was the first sort of and kind of like regularly kind of worked with a lot of white hat sort of hackers who have been kind of leaderboards at Apple or Facebook sort of bug bounty programs, and kind of actually kind of challenge them to kind of try and get into the system, and that has kind of helped us a lot. The second thing is, as I said, it has been an evolving process. So we kind of find it funny the way we used to kind of store crypto like 3 years back when we kind of started in 2018, and now the way we kind of store it, it has kind of gotten a lot more sophisticated. We've been constantly trying to kind of up the ante and ensure that none of the funds kind of have any sort of attack vectors. Attack vectors can kind of come in sort of any sort of ways, and we've kind of also realized they can kind of actually be even language level vulnerabilities. Look, so if you're using a PHP or a Java or something of that sort, and there is some language level vulnerability that was kind of out there, or a specific library that you're kind of using, that library can be kind of exploited, and someone can kind of get access to your database or some of these sort of systems and kind of try and meddle around those things. So, and like we kind of support the largest number of blockchains in India, and we like so every independent blockchain like Cardano, Solana, or some of these, and we actively support deposit and withdrawals for all of those. Like for even tokens like USDT, we have like 5 or 6 sort of chains on which you can deposit it, like a Polygon or say EOS or ERC20, TRC20. So we've kind of part of it. Mahin was kind of rightly pointing it out that we've still not been able to kind of very significantly kind of reduce the dependence on a CTO sort of a person for that. And Mahin, having been in that position, he would have realized that is kind of a recurring sort of a challenge. But that's something that we're kind of now working towards and trying to kind of decentralize that to a certain extent, so that that doesn't remain kind of a single point of failure. But in the last 3.5 years, we've kind of worked a lot seriously on the security aspect of it. And on the luck side as well, we're fortunate user funds to kind of any sort of attacks that have kind of happened. We've never kind of. Hello.
I don't think you're audible, Gaurav.
So I was not audible the entire time, or like?
No. Just
Now you are audible.
10 seconds. Yeah.
Yeah. So last, I was just kind of saying that, like, I was just mentioning that for the last 3.5 years, we've kind of seen a lot of attack vectors. We've kind of defended all of them and have not kind of lost any of the user funds. And I think some of these learnings will have to kind of also improve over a period of time and kind of look at other solutions so that one person doesn't kind of have a significant control of any sort of the user funds and all. We've been able to kind of multi-sig, and few of these things have of course been implemented, but like over a period of time, like for like different sort of blockchains and other things, it is not that efficient or not that easy to kind of implement it. And there is a lot of risk that is kind of involved in terms of movement of those sort of funds as well. So we've been kind of exploring a few sort of products around that, and hopefully we'll be able to kind of maintain a clean record that none of the funds, user funds, have been compromised till date.
Fabulous. Thanks a lot. So I've just been reminded that we have 3 more minutes. So with that in mind, instead of throwing out another question, I would love to give 30 seconds to each one to close out. So let's start with the same order. Amit, do you want to go first? You have 30 seconds.
Sure. My final takeaway is that I think that
I think some technical problem there. Paweł, you're next.
Yeah, sure. So I think that the financial inclusion and the mass adoption of blockchain and crypto as a whole requires anti-money laundering, sticking to the regulations and appropriate regulations. And especially in here, what is missing still is a good data ecosystem, shared intelligence that would allow actually law enforcement, regulators, service providers, and of course blockchain services to cooperate and exchange data whenever it's beneficial and legal.
Great, thanks. Mahin, 30 seconds for you.
Yeah, I'll have just 2 simple messages. First is that everyone need to understand, if it is not your keys, it is not your coins. And second is, investing in crypto is good, but if you haven't planned your inheritance, then it is useless. That's it.
Great. Gaurav?
Yeah, so I would say like the first steps for every sort of user kind of starts with centralized exchanges. But over a period of time, once your portfolio gets to a sizable size, 5 lakhs, 10 lakhs and plus, you should also figure out how to kind of use a hardware wallet and kind of ensure kind of proper upkeep of that. So yeah, that would be my message.
Great. I don't think Amit is back. But again,
he is. I mean,
I'm here. Yep.
Yes, I can hear you, Amit.
Great. No, my 2 takeaways are that similar to my esteemed panelists, is that financial inclusion and bringing more individuals, households, companies into the financial system is not a trade from having a system that is safe and secure from a fraud and anti-money laundering perspective. I think that with the new technology, we can both include and engage more participants in financial services and have the system controls that are needed. And secondly, I think that as we
Amit, apologies if you're still speaking, but I cannot hear you. And I know we need to close out this session. So again, I want to thank all the panelists for being here for a wonderful session on infrastructure building. So with that in mind, I'll turn it back to Swati.
Well, thank you so much, Mr. Patwardhan, for such an engaging session. It was really informative, and thank you so much to all the panelists for giving your time and making this possible. Even to you, Mr. Patwardhan. Thank you so very much. Have a great day ahead and stay safe. Thank you.
Thanks, everyone.
Thank you very much.